And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It's time for the market forecast for Monday, November the 14th. My name is John Hoagland. Thanks for trusting me with your time. As always, our focus is on seeking accurate context, risk management, and always remaining patient in our trading. You know, it's a good prep, I think, that we do this every morning. I know I enjoy it. I hope all of you enjoy it. And we're going to just jump in here. We've gotten really no economic information coming out for us, at least on the schedule that I'm looking at. We do have one talking Fed, but not until much later on. John Williams is due to speak at 5:30 Central. But throughout the week, tomorrow we've got kind of a biggie at 7:30 a.m. PPI final demand. This is a beginning. This is a preliminary number. Might be quite impactful. Also, the Empire State Manufacturing Index, kind of a secondary number. And Patrick Harker speaks at 8 o'clock tomorrow. Wednesday, retail sales, import-export prices, industrial production. John Williams speaks at 8:50 tomorrow. We got business inventories and housing market index after that. A lot of focus is going to be on housing and employment this week, as well as anything that any of the talking Feds have to say. Thursday, lots of talking Feds, Bostic speaking, Meester speaking, Kashkari speaking, housing starts and permits, of course, always jobless claims, manufacturing Fed, existing home sales on Friday, along with the Michigan sentiment and leading indicators. So that's what the economic forecast or the economic future looks like for us, at least in things that we can expect and things that we know are going to come out. A lot of Feds talking already yesterday. We have President Biden meeting with the Chinese president, or whatever you want to call him, President Xi. The information really just coming out about that. So we don't have the opportunity to really read into anything that's been coming out about that here just yet. Yesterday, the Fed's Waller spoke rather extensively. He says 7.7% inflation is enormous. Rates will not be reduced until there is clear evidence that inflation is falling. Housing needs to slow down. That's one of the things we'll be looking at this week with the economic numbers. They're thinking about a 50 basis point hike next meeting here in December. The U.S. dollar is enjoying some upside relief, up about 1% this morning earlier, up about 0.6% now. This after about a 4% drop last week, largely due to Waller's comments this morning, talking about interest rates. The crude prices have softened again on surging COVID cases in China. Crude oil is up about 1% this morning. Well, now it's down about 1% this morning. So, yeah, it has softened, of course, with the lack of potential need in China as they continue to struggle with COVID over there. VIX this morning, 6% higher, 23.88. That's what it says on the thing. The dollar index up a little bit again, 106.92, and the yield on the 10-year, 3.88%. As always, make sure you hit the lucky like button if you like what you see here. Share, comment, question, feedback, and heckling are always welcome, as well as love. Make sure you subscribe to our YouTube channel so you get notified when we do go live. Today at 2 o'clock, Make Hogue Money. Tomorrow, forecast, Make Hogue Money. We do have group coaching today. We're very busy day on Wednesday here. We've got the forecast. I'm going to be speaking with Deanna Angelo from Market Stalkers at noon. I don't have the information as far as being able to get to that just yet. We do have at 12:30. We do have Jared Tendler, the author of The Mental Game of Trading, coming to talk with us for about an hour, just basically answering your questions. He is going to be on group coaching, and we're looking forward to seeing Jared here and seeing what he's got to say and how he's going to answer your questions. I know a lot of folks really like this book. I'm working my way through it right now. I enjoy the book. I think it's a really good read, and it's got some really important points for the mental toughness that you need in trading. So we'll look forward to that. And then, of course, we have Make Hogue Money after that. So, again, a very busy week this week. And a busy week as far as economic numbers, but not today. Not today. We don't have a lot of economic numbers. Shaw, good morning. First in the room, you win the prize. Sonny, NASDAQ, Scott Saw, Andy Conquered, Caprice, Theo, Dark Heaven, Dimitar, Brody. The Roosters here. Fred Decker is back, ladies and gentlemen. It's good to see you, Fred. I kind of figured you'd have some sort of comment about the Bears and the Packers. And I was watching that Packers game yesterday, and as we got closer to the end, I kept telling my wife, if you give them a chance, they're going to win. If you give them a chance, they're going to win. What did they do? They got a chance, and they won. Very exciting game as well. Bears, I think, are doing pretty well. I think we got some really good potential. I think maybe we have finally found a quarterback that we can lean on for hopefully a long time, Fred. I'm thinking Justin Fields is really coming along very nicely. Joel MB, good morning, Rick, my brother, another Packer fan. Serenity Trader, Brody. Seahawks had a minor setback in Munich. Maybe they were out drinking too late at the Hofbrau House. Bill, good afternoon, or good morning, I should say. The Scarlet Arachnid, good morning. Fred, the S&P looks like it may open in balance. When the open is in balance, I like to wait for direction to be established. I don't trade well on Mondays anyway. Me either, Fred. I don't usually trade all that well on Mondays, so I'm going to try and stay very patient today. It looks like we are opening in range and in value, so that tells me better trade locations may come as the day goes on. Danny Ireland has a comment about the Packers. We're doing a little heckling of each other here this morning, and that's all right. A little good-natured heckling. Hegel Matters, good morning. Scarlet Arachnid has the quote for the day. I can't change the direction of the wind, but I can adjust my sails to always reach my destination. Jimmy Dean. That quote goes a long way for me, being a sailor and spending some time on a sailboat with my mom. It's a really good quote. She can't change the excuse me, can't change the direction of the wind, but you can adjust to it. Vince, good morning. Jason Lewis, Dowitzer, good morning. Caesar, Mike Russell, Joe, good morning. Serenity Trader, I can't change the direction of the wind. Oh, God. All right. Yes, you can. You can. Just make sure I'm upwind. Anissa, ZK, Alejandro, Sarah Hall, good morning. Prayers and love to you as well. John Williams, the Star Wars music composer. No, this is a different John Williams, of course. Terry King, Rob T, Kevin Guy. Yeah, Fred, probably not this year for the Packers. They've had kind of a rough year, but it was a heck of a game yesterday. Jan RCU, Dr. VJ, good morning. Tyler Timothy, George, good morning. Yes, we all heckle with love here. A little good-natured heckling is never a bad thing, right? Orion, good morning. Rusty Golfer, Jay. Does anyone know how to make TS keep the indicators like Delta to the time set before the daylight savings changes? The platform show the Chicago time now, but the indicators are off. Well, I think the only indicator that I noticed that did that was the TPO charts, because you have to set those to when you want them to begin. Delta, I think, it should adjust automatically, but you may want to go in and look at that. And we'll take a look now. Terry King, Robbie Crust, good morning. Mohammed, good morning, everyone. So a busy week this week, busy day today. I think we're done talking about what we got going on this week. I think I forgot about Tuesday. We have Coach's Playbook at 11:30. So lots going on. JST Wave, good morning. So let's jump into the charts. We're going to start with the daily and the S&Ps as usual, and we'll see what we have set up for us today as we prepare for our trading day. All right. Settlement 4,000 and a quarter. Over open interest, we saw an estimated loss of 8,500, 8,400 on Friday. We had Thursday on this big update, we had a big jump of 55,000. Now to a loss on Friday as a continuation to the move up. It's a bit of a warning shot. Medium time frame structure is still higher. Longer time frame is at risk of breaking. I think we've got a little bit more to go. If I take a look at the continuation chart here. Okay, we've got this trend line taken care of. This is the major trend line that we're looking at. This goes off the all-time high up here. Boom, boom, boom. If we can get up there, we're going to see quite the move to the upside, right? We've got weekly kickoff high at 41.23, which puts us up to that kind of area up there. But we've got a lot of work to do, and the open interest loss on Friday with lower volume. The volume was actually still pretty good in New York on this up day. Also, we ended up with a Delta negative day. By the end of the day, Delta remained negative by about 16,000. So that's usually an indication of a longer time frame accumulation or a kind of a liquidation, if you will. Take a look at this on the 30-minute chart. Don't forget, there's very little data today. A lot of what traders are going to be looking at and thinking about today is coming from their own minds. Keep that in mind. So, this was a somewhat of a negative Delta day. This was a negative Delta day, and price continued to move higher. What that tells me is that it's a longer time frame buyer that was present in the market yesterday, or I should say Friday. I keep saying yesterday when it comes to Friday. But was that bringing new business into the market, or was it taking business out? And if with the loss in open interest, it indicates that it was taking business out. Now, we're inside value. We're inside range. We've got a couple of kind of high volume nodes. We could basically repair this profile from Friday. We've got point of control down here, volume point of control here at about 39.67. We've got another high volume node up here just above our overnight high. We could just repair into those levels with no economic information. Again, it's whatever's going on in the minds of the traders and investors. If they're just going to sit and wait and see what happens, then repair seems relatively likely. Now, there's a little bit of information on the TPO charts. Okay, this is Friday's low. It's a kind of a low excess low in the daytime frame, but it's a relatively weak low because it basically took us to the base of the late spike. Now, Friday we talked about the late spike base being here. It's a kind of a two-stage late spike, and the market just stopped basically a tick from the base of the late spike, which is exactness, which does not exude confidence to the upside, but we have a poor high. So we have kind of excess at the bottom of this against a weak level, and we've got a weak high up here, which indicates an unfinished upside auction. What the heck are we supposed to do with this? Well, look at last night. Look at this profile. A perfect bell curve. Where? Between the high volume node here, and maybe we're going to get a look down to this high volume node here. The market really imbalanced, so try and stay very patient today. Very, very patient today. When this is going on, I'm gonna kind of think about how often one extreme of the initial balance remains either the high or the low of the session, and it happens a lot. So we've got really just an opportunity, I think, to wait, be patient, look for better trade locations as the day goes on. All right. Fred's good question. We pointed out that the excess at the low from Friday was low excess and kind of a weak low in the longer time frame because of the exactness to the base of the late spike from Thursday. We also have a poor high. So is there confidence in either direction? I mean, when we're looking at the profile, a confident market doesn't leave anomalies. I'm sure these are the anomalies you're mentioning. Right here and right here. Okay, and these are original anomalies too. These aren't already run through on the previous day. So with the lack of confidence and the lack of excess on either side of this market, with no information and the way the overnight played out, I'm really kind of going to stay patient and look for better trade locations as the day goes on. Like you mentioned, Fred, the market's in balance. Be patient. Better trade locations are likely coming later on. Let's check out crude oil now. Crude oil is in rollover. Wednesday into Thursday, one of those 2 days, we will be moving into the January contract, January 2023, already into January. That's going to blur open interest and volume. Overall, on Friday on this push to the upside, we added 16,000 in new open interest, but that open interest came in the February, March, June, and July contracts of next month. December, the current front month, lost 14,000 to January, which gained 14,000. What does all that mean? I don't know. Everything gets blurry during rollover. Volume was lower, but that could be rollover. Where are we? We're range bound. We've taken out the low. We've taken out this trend line. It almost seems moot now because it just keeps getting run through. I'm going to just take it and leave it there. We're in the middle of weekly kickoff high and low. We're in the middle of last week's range. Patience, ladies and gentlemen, patience. We've got naked points of control above. We've got visuals above, here and here. We've got visuals below, here and weekly kickoff low. We've got a gap that we filled on Friday here. Now we've created another gap here. Do we open with a gap? If we do and we can't close the gap, we're going to look to lower. If we open in range and in value, we're going to have to try and stay patient because we're going to be looking for better trade locations as the day goes on. Let's see if we've got the opening range. Neither the high nor the low. Hopefully nobody jumped into that. So stay patient in all these markets, it seems, because we are just we're in our own heads today. We don't have information, don't have talking feds, we don't have economic information. All we have is those voices in our head that say, buy here, sell there, buy here, sell there. Be patient. Here's the NASDAQ, similar situation. Again, volume and open interest. They have sent a bit of a warning shot. We lost 5,300 in open interest on the upside here on Friday. How is that a warning shot? I mean, Delta was congruent. Okay, while Delta was divergent in the S&Ps, it was congruent in the NASDAQ in that we added there was 4,500 positive delta, meaning more aggressive buyers brought price higher. It wasn't the same in the S&Ps. We got an inside day, very narrow range. Open interest, again, we lost 5,300. Volume wasn't tremendous. Narrow range in equities. Traders just seem to be pondering what next. What next? And a lot of focus is going to be on the talking feds. All right, so here's the range again. Settlement up here, 11,848 even. Right in the middle of an area of potential repair. We've got the point of control up here, which is a high volume node. We've got a high volume node here. We've got the overnight session inside of those. If we just kind of go into repair here, and this is a true double distribution trend day. Here's the TPO chart. So true double distribution trend day, anomaly, not a confident move to the upside according to the anomalies. More excess to the bottom than the top. This is a weak high up here. So again, we're not looking at strong highs or excess at the highs. We're looking more like the market has kind of put up an unfinished upside auction. It doesn't mean that high isn't going to hold for a while. It's just not very strong. Here's the TPO settings here. So I'm going to open this up. So I'm in Chicago. This is the NASDAQ, which technically regular trading hours open at 8:30. So I've got 8:30 as my start time and 1500, which is 3 p.m. as my closing time. Now this market trades all the way, for another hour, but I don't add that information because then I can see the true late spikes, and anything that happens after that is low volume typically. The session 2 starts at 5 p.m. Central and stops at 8 o'clock. Now they've fixed it now that I could go all the way to 8:30. For a while it was messing up the profiles. But in the NASDAQ, I use 4 tick TPOs. So each TPO in the NASDAQ is a full point. All right, let me know if you need any more information. And if you do have more questions, ZK, come to the group coaching, and we can get a little deeper into how I have all of this set up. All right? Let's take a look now into gold. All right. Well, I'm afraid that we missed something at the end of the week before last. We missed an island bottom, and I don't remember talking about it. I don't remember seeing it. I noticed it on the charts as I was kind of going through things over the weekend, and some bitch we did. We put in an island bottom down there. Look at how strong this move to the upside is. Now, I'm not saying it's the island bottom that did that. Technically, it is a reversal signal, and this market certainly did reverse. And a lot of that, of course, as we all know, had a lot to do with the dollar. Dollar weakness, gold got strong. Well, where are we now? We got an inside day. Open interest continues to increase as volume waffles. That's something kind of typical in gold. You get big volume one day, low, big, low, but the market moving higher, of course, is is something that's important. Now look at the cumulative delta. Delta has been decreasing while price has been increasing. That's indication of longer time frame buyers present in the marketplace. The longer time frame buys it, they get the short time frame traders too short. The short time frame traders push it higher. They push it higher and they push it higher. We don't know how far this is going to go. We got to keep, of course, an eye on the dollar. Everything here revolves around the dollar. Here's the 30-minute chart. Here it is. Gap, gap. We gapped lower, ranged, gapped higher. Island bottom. Important structure. So we missed that. 1725 was last week's weekly kickoff high. It was resistant until it wasn't. Thursday we ran above it. Friday we do have a little bit of a gap here. The market, I believe, has opened in the narrow range that we had yesterday. And again, it's a somewhat of a narrow range today. We have the price right back into value. Last week's high, I think, is important. We do have a late spike that we did open below. We opened below the late spike. Here's the TPO chart. Okay, this late spike is this is the actual close, is at 12:30 Central Time. So we did end up with a late spike. The market has opened below the late spike, indicating potential rejection of higher pricing. Potential. So if we actually do end up accepting in or above the late spike, it's going to be a powerful move. Alrighty. So in range, in value, looked like maybe we were going to test down and open with a gap, but the market already too short from overnight inventory, already reconciling that overnight inventory. Stay patient again. Stay patient. Really kind of focusing on the overnight high and overnight low for opportunities here. Because we're getting pretty close to that overnight high. We still have a naked point of control that we did not test on Friday in regular trading hours. However, this is the late spike I'm talking about, and the market did spike at the end of the day as well. This is regular trading hours. This is after regular trading hours. Look at the volume. There's not a lot of volume there. But still, the market continued to push higher. We did have negative delta. So that negative delta on a day that ends up resolving higher may indicate, and this is supported by open interest, adding 13,000 to open interest on negative delta against price moving higher indicates longer time frame buyers. Those longer time frame buyers remain present throughout the day, and they end up getting the short time frame traders too short. And those short time frame traders who are too short want to go home flat. And they certainly want to go home flat on a Friday. So they start to turn the other cheek, and that's when we get the late spikes at the end of the day, because all those short time frame weaker hands traders trading against the longer time frame big money can't hold those positions overnight, so they bail. Well, we squeezed out the short time frame on Friday. What are we doing today? We're in range, we're in value. Seems as though longer time frame traders are, at least for the time being, holding pat, because this move to the downside is largely caused by short time frame traders getting too short before the open and reconciling back to where the market opened last night. Stay patient. We're in range. We're in value. It's one thing to make that assumption and trade to that hypothesis, that strategy, but it's kind of hard to do that when the market has not been necessarily trading to that hypothesis and that strategy in the recent history. So again, try and stay patient. Here's the euro again with the dollar. We get a nice push to the upside. We added 5,300 in open interest on Friday alone. Volume fell off just a little bit. Is this auction presenting as healthy? It is overall. I think the volume has been pretty good, and we've been adding open interest as price has been moving higher. But I think, again, we're starting to get towards a little bit of a warning shot here inside the extended trading hour range. The downside market state is broken in this right now. Okay, we've got trend lines that are coming in off these highs that are below price right now. So there is potential for this market technically to go from downside to upside, or at the very least some kind of ranging activity. Take a look at the 30. If anybody's looking for any dating, we've got some spam coming into the chat room there. I do apologize about that and how much I can do about it. So Friday, we left a gap. We gapped through a gap. We tested through a naked point of control that we haven't tested in regular trading hours. Again, the market opened, got too short, right back to where it opened. This is short time frame control, ladies and gentlemen. Plain and simple. There's no longer time frame traders present at this time. That can change in a heartbeat, of course. Somebody says something stupid, somebody blurbs about something, anything can change and anything can happen, right? ACH, one of our acronyms here on the market profile. Market forecast is anything can happen. Be ready. Make sure you're prepared and always putting in stops. You got to protect yourself. Always wear a stop. Again, patience. Overnight low, overnight high. Those are really the extremes for the week so far. And those are really where I'm going to be focusing on opportunities. If we can't take out the overnight high, can't take out the overnight low, our move back inside would make sense, right? Here's the TPO. P-shaped profile indicating short covering on an increase in open interest. All parties acting in concert. Excess at the high, lots of excess at the low. Tenure. All right. The market, bond market was closed on Friday. Look at how low the volume was. Wow. And still yet we added 16,000 in open interest in the 10-year futures. Where did that come from? New shorts? Are we creating kind of a bull flag here, perhaps? We all know rates are going to go higher. How can that happen? How can that be? So here's the kind of a bear flag that we're talking about. Bear flag, small ranges, low volume. We added 16,000, probably just some shorter time frame, medium time frame speculators, whoever it was. Kind of a repair day on Friday. Very low. There's no real overnight inventory. We did open with the gap. We closed the gap. We're in range. We're in value. It's like, it's like the end of an inning. No runs, no hits, no errors, nobody left, and nobody cares. Just patient, look for something to change. I would be thinking about taking a trend line across these swing highs and using that for a potential execution. If this is a bull flag, taking that out could push us to test last week's high, at the very least the naked point of control from Thursday. All right. Now, natural gas. I don't trade this, and I'm glad, but it's a fascinating market. We lost 18,000 on Friday in open interest. Volume was pretty decent. So we maybe had some final longs trying to get out of this market before it took out this low. Our weekly kickoff low remains the same. 570. We tested to it almost 3 times last week. We're range bound today. Here's the 30-minute chart. It is also coming into rollover, so volume and open interest are going to get a little bit blurry. Here's our island top, the push to the downside, weekly kickoff low, which was supportive last week. We've got some overnight inventory. Looks to the long side. It looks like we've got at least the opportunity for some of those overnight longs to see if maybe they can get this market to get up into this gap and close this gap, which is basically a gap close to the island top. That would be pretty aggressive, I think, but there's plenty of visuals and a weak structure for the market to do that. A lot of it depends on how cold it is around the world, it seems, and hopefully it doesn't get too cold. All right. So, okay. All right. Yes, besides the weak dollar, physical gold and silver moving to the eastern countries. Interesting. All right. All right. I think that's it. Don't forget, what do we have today? We have group coaching and make Hogue money, and then the recap after that. So I look forward to seeing everybody. Take it easy today. I don't want anybody getting hurt today. It seems like one of those days where if we get too aggressive, we're going to go looking for trades that probably aren't going to be the ones that we really want, the asymmetric, the good trades we want. I got to go get Lacey out, and I will see you later on. Trade well today. Get out and profit. Don't forget to say a prayer for peace. Be kind to yourself. Be kind to others. Get out there and profit today. I'm going to take my deep breath. See you in the proverbial pit in just a few minutes. Trade well today.